Hello, this is Mike with the NetPicks Options Academy. This is the weekend recap video for Saturday, October 24. So if you go back to the videos that were recorded and posted last week, specifically the weekend recap video last weekend, we talked about the market being right up against some pretty key resistance levels, and we also talked about the market being very overbought. So we were anticipating a pause or maybe even a pullback this week, but we also threw out some levels that if the market did start to move higher, and we had some catalysts this past week, that we could potentially get up and test the 200 period simple moving average on the daily chart of the SPY, which we're looking at here. That 200 period moving average is that dashed red line. And you saw that we did get a very strong end to the week, specifically Thursday and Friday, really super strong, and we did get a close up above that level. So no doubt about it, the market has just continued to plow its way to the upside. Okay, so super strong market. Couple things to look for heading into next week. Number one, the catalyst this past week for the strength. We had a number of big earnings releases come out, specifically some of the tech names. We had Amazon, we had Google, we had Microsoft. So a lot of the big tech names led the charge to the upside to end the week. Not to mention we had the big news out of the ECB. We had the rate cut out of China. So what we're seeing here is the continuation of the central banks worldwide doing their best, anything in their power to prop these markets up. And as much as we want to say this market is overbought and we want to play the move to the downside, we can't fight the fact that this market is very much in a bullish mode. Okay, so heading into next week, are we overbought here? Yes. Does that mean we're going to head lower right away first thing next week? No, we're in the heart of earnings season, so the catalysts remain next week. If the earnings continue to impress, we could very well just continue to move to the upside. So where are the areas of resistance that I will be looking at next? Well, up above us, since all of those moving averages are now below us, those will be areas of support. So if we do pull back, there's a lot of areas of support there for the bulls. If you're a bear, if you're expecting weakness, there's a lot of levels that we'll have to break through. On the upside, I will look at all of the 0.50s and the 0.00 levels. Notice right where we closed here on Friday, 207.51. That should be no surprise. That's right on top of a key level where the market oftentimes will stall out. So up above us, we've got 208. We've got 209. And then we start to run into some swing levels up around the 210, 211 area. So if this move does continue to move to the upside, those are some areas of resistance to watch for. Down below us, pick your level here. We've got a whole cluster of moving averages. I've talked about it in the past videos. What I would love to see happen before we move higher, I would love to see us pull back into the 50 period moving averages, the simple and the exponential moving averages. Those are those mustard colored lines here, both the dotted line and the solid line. So we've got areas down just below 200 and right around 200 even. That would be perfect. I know that's asking a lot at this point because the market is so strong, but that would be a prime pullback for us to keep an eye on. Surprisingly, the volume has actually been decent the last couple days. If you go back to the last couple of videos that I did, I mentioned that it's been more of a slow grind to the upside with not a lot of volume behind the move. The volume's not great. Okay, so we can't get super excited there, but it's not as bad as it was going back a week or so. Okay, so the way that I'm leaning next week, a lot of it depends on what we see out of earnings. I would expect a slow push to the upside to start the week, and then at some point next week, I do expect a day where we do get some considerable weakness. Okay, we're due for a pullback. We're due for some profit taking, and I expect to see that at some point. My guess would be midweek next week. Okay, and really all of that commentary there holds true for the other two index ETFs that we track. You can see QQQ, the big gap up on Friday after the news out of China and after the earnings releases. We're right up near those highs from earlier in the summer. Okay, we're a stone's throw away from the all-time highs, again, on many names. And many individual names are already there. Amazon pushed right back up to an all-time high. So there's a lot of strength here in some of the big market leaders. Would love to see a pullback into the moving averages. Whenever you see a gap like this, okay, expect at some point over the next couple of weeks that the market gets down and tries to fill that gap. What does that mean? Well, we close at 112.78 on Friday. I would expect a pullback into that 110 level. I think that would be very healthy, and we'll see if that does play out towards the midweek um, this upcoming week. Finally, on the Dow, it was pretty important to see where Friday closed at. Okay, we were talking about this in our training room to end the week. I mentioned, we're right up against that 200 period simple moving average. I wanted to see where we closed, and because we were testing that level throughout the day. We were hovering right on top of it, and then the afternoon rally up near the highs of the session did give us the close up above that level. So we're very firmly above all of the key resistance areas at this point. Okay, the only problem is this move has been so big so quick. We haven't had any type of a pullback. Typically, when you break a big resistance level like that, you'd expect some follow through. But the market, it is showing some signs of getting tired, and I would expect some type of weakness here midweek next week. Okay, if we take a look at the VIX, no surprise. I mean, when you start to take a look at those daily charts, it's no surprise that if you see a market move straight to the upside for over 2 weeks in a row, it's no surprise that the fear has been sucked out of this market. I mean, look at the VIX. Now we're right back down into the 14 handle. We actually got down into the 13 handle briefly on Friday. Okay, so you can see that you're getting to levels now where there's going to be a lot of complacency, and everybody just assumes, hey, we broke through all the key resistance levels, we're going to shoot to the moon. This is where you can expect, at some point you're going to get that session where the profit taking happens. Okay, the pullback starts to happen, and you get a pop up in the VIX. So when I see the VIX this low, it does a couple things for me. Number one, I don't like selling low volatility. Okay, so for those of you that like to use strategies like short vertical spreads or selling iron condors, things like that, we're not going to do a lot of that because the volatility is so low. When the volatility is low, the option prices are cheap. It doesn't allow us to collect a ton of premium. It doesn't allow us to put on a trade with good reward to risk ratios. So for us, our focus is going to shift more towards directional trades. I'm not thrilled with it, but that's what we're going to do. So when we get these trades to set up over the next couple of weeks, at least initially, we're going to be looking at long calls, long puts, long vertical spreads. That's the problem when volatility disappears like this. Oftentimes you turn on CNBC and they make it sound like that's a good thing. Well, for options traders, it's not, because when the volatility goes down like this, our playbook shrinks. There's not as much that we can do, with good odds. Okay, so we'll see if we can get a pop up here over the next couple of weeks. Now, in the previous couple of videos, I talked about me in my own personal trading, wanting to try to reduce my overall exposure on the upside. Okay, I wanted to get into long trades because the market's super strong, right? But because I felt that the market was already overbought heading into this past week, I decided to take more conservative plays, some vertical spreads in cases, very small position sizes, and this latest round of trades that have been closed out, I've been trading in between 10 and 25 of my percent of my normal position size. Okay, so if I'm normally trading, 10 contracts, I'm just trading a couple contracts on many of these positions. And the whole idea there is, if you get a move that gets extended, okay, in many of these names, we're on trade number 2 and 3 in a row on the upside. And what I don't want to do is I don't want to end up giving back a ton of my profit trying to chase the move higher. So as we continue to take re-entry trades on the upside, for example, we're going to continue to pull back on position size. Okay, and that's typically something that we will do when we get into these long trends. However, by taking that approach, it's not perfect. Okay, and as a result, I left a lot of profit on the table here this past week. Okay, we had a lot of winning trades hit full targets, and because I was trading a fraction of my overall position size, wasn't as profitable as I could have been. Okay, so I'll say that right up front. So let's take a look at some of the trades that were closed out. These are a couple of the trades that we've taken a look at here in the last couple of videos, both the weekend recap and the midweek recap. So you can see this stretch on SPY, and here's what I'm talking about. If we go back a couple of trades here, we had a full target winner on the upside here. Partial profit on trade number 2. This was trade number 3 from this past week. So when I saw this, of course hindsight's 2020. You look at this chart and you say, wow, we should have just stayed in the whole time with 100% position size. But if I were to scroll over here, let me bring this over. We start to get into this type of a chart. This is what we were looking at heading into this past week. We had seen a big move to the upside. We started to see some consolidation, started to see some pullbacks. So they were all classic signs of a tired looking market. Okay, so there's no second guessing here. I still think it was the right decision to reduce position size. Now, ultimately, you can see what happened this past week. I mean, we had another big leg to the upside. So I did catch this trade. Okay, and the way that we're teaching this to our students, we talked about either taking a call spread or a long call out in November. So I played it with a long call. Okay, we booked just under 50% profit on the long calls. Okay, we booked right around $200 of profit per contract on the calls to play the move to the upside. So really nice move. Okay, so now if we get another long setup in this upcoming week, I will continue to trade small position size here. I'm not going to continue to chase this move to the upside with big size. Let's try to conserve the great profits here from the last 3 trades. So we are now flat, good position to be in over the weekend, no doubt about it. So really nice trade there on SPY. Again, right around $200 of profit per contract, or around 50% returns. And we were into that trade. It took about a week, just under a week, for that trade to complete. Very typical of a holding time for us. Over on the other index ETF, this was just a phenomenal trade. This is one of my best trades in quite some time. So you can see this long trade, very similar looking chart to SPY. We had trade number 1 on the upside here, full target. Partial profit on trade number 2. Then trade number 3 from this past week. Again, we were in and out in about a week's time. We talked about this trade last weekend in our weekend recap, and we talked about holding it. And over the weekend last weekend, we mentioned it was great that we moved the stop to break even to reduce the risk. It didn't feel like it had much left in the tank to hit full target. Well, little did I know that China was going to cut interest rates and all of the tech names were going to blow their earnings out of the water. We saw a big gap up on Friday. So great way to end the week, because heading into Thursday, heading into Thursday's close, we had just missed out on our full target. So I was looking at this chart saying, man, it would have been nice with all the earnings coming out Thursday after the close. It would have been nice to get out of that trade with profit. Well, we were fortunate enough. We came in Friday morning. We were given just a huge gift by the market, because we gapped up over $2 above our second target. So we took a huge winner on here. On this trade, we booked about 180% profit on our November long calls. Okay, so we were into the position. For about $2.20 per contract. We exited the trade, booked about a $400 profit. Okay, so just under a 200% return. Okay, in 7 days, about a week's time. I mean, that's just a phenomenal trade. It's been a hugely profitable stretch on the index ETFs. Okay, so now we're flat heading into this upcoming week. So good position to be in there. Apple was another one that we've been talking about in the last couple of videos. Our long trade here, it wasn't the easiest trade. It was a test of patience. We had to survive a number of sessions in here over a week where we were just moving straight sideways. Well, you can clearly see from the chart, the end of the week, Wednesday, Thursday, Friday, just a straight shot to the moon. So we took a pretty safe position because we have Apple earnings coming out this upcoming week. So we tried to be conservative. We went out. We took some November calls on this. We booked right around between a 40 and 50% profit, depending on the position. We talked about a couple of different types of positions you could have put on. So another couple $100 of profit there on Apple. So really nice move to the upside. So the great part about this, I mean, these winning trades, they were phenomenal trades. Didn't take them a ton of time to manage these trades. I mean, when you're into trades for about a week at a time, it's not something where you have to track these trades from opening to closing bell. I mean, you get these trades on, get your targets in place, get your stops in place, and you just let them work. So really nice trade there on Apple. Amazon was another one that we had talked about in the last couple of videos, specifically last weekend's video. Let me zoom out here a little bit so you can see that. So this is the last trade that we talked about last weekend. We put on a call spread. We went out into November, and we put on the November 555, 575 call spread. And let me move this so we can see the entire explanation here. So we put on the call spread for just under $1,000 per spread. Sold it out, booked about a $250 profit, 26% return. So was it the greatest percentage return? No. I mean, when you're starting to talk about 180% return, like we talked about on QQQ, it's nothing like that. But remember, we were trying to be safe here because we knew the earnings were coming out this upcoming week. So this was designed to be a conservative play, still booked a $250 profit. Just a really, really nice trade there. We filtered all of this price action out here to end the week. Again, we do not like to trade through earnings, and you can see the large gap to the upside. This is a perfect example why we do not like to trade earnings. I mean, you see a $60 gap overnight, and you start to see a 10% move overnight. If you're wrong on that, you're going to be facing a large loss overnight. I don't like those odds. I don't like that risk. So we will pick this up next week. We'll try to get in sync with the next fresh setup. So we are flat on Amazon heading into next week. Couple of trades that did not work out. Let's be completely transparent here. Here's Google. So we tried to sneak in one more trade, just like we did on Amazon. The Amazon trade worked out. Okay, we hit full target there, but the Google trade, it's set up in a very similar trade. We put on a call spread. This one did not work out. We ended up stopping out, took a 21% loss on it. Okay, and this, again, this whole sequence, the last couple days of the week, the short trade, these two long trades, we did not consider those because of the earnings that were out on Thursday. So now we will start to pick this one up again next week now that earnings are out of the way. And here again, you can see a large gap to the upside, $60, $70 gap to the upside overnight on Google. We don't want to mess with that overnight risk. I don't like that flip of the coin. I don't think you have good odds long term. And we talk about that in the training. Not only do you have to pick direction right on that move to the upside, you're going to see volatility get crushed on that. So even if you pick the direction correctly, you're still not guaranteed profit. Because if you bought options here, let's say you bought a call option, okay, the volatility just got zapped on that after the earnings came out. Okay, so you have to be cautious there. For me and my style, it's not something that I like to take advantage of. Another trade that did not work out for us. This is let's take a look at Goldman Sachs here. Okay, we gave the short trade a shot last week. That was our first trade that we took after earnings. The earnings were out the previous week. This short trade was the first one that we gave a shot. This one also did not work out. We hit a stop. We are expecting the market to head lower. The financials had a very, very strong end to the week. We can throw a big thank you note to the central banks worldwide for that one, right? So unfortunately, we are now flat out of that short position on Goldman Sachs, and we're just waiting for the next fresh setup. So, the last week, like I've said in earlier videos, I'm not just going to sit here and show you my best trades for the week. We're going to take a look at winners. We're going to take a look at losers. Hopefully you're starting to see. We had a 20% loser on the Google position. Here on Goldman Sachs, we took about a 40% loser there, about a pretty large loss. Okay, but in the end, when you start to talk about taking all trades on our watch list, we're far better off on our winners because our winners are larger than our losers, and we also have a pretty high success rate to boot. So we're in a good position. We're still making money. If you're trying to avoid all the losers, that's a very difficult position to be in. You're going to end up trading scared money. Okay, I take all trades. I do my best to control my position size. I try to determine when I want to be aggressive, when I want to be conservative, and in the end, we will make money. Okay, you're never going to find me trying to avoid the losers. Do I like taking losers? No, but it's part of the game. The only way that we can get to those winners, those 180% winners on QQQ, is if we're taking all trades. If we're willing to survive the losers along the way. Wouldn't be surprised at all if Goldman Sachs we come in next week and we have a huge home run trade there. Okay, so in the end, the way the system is set up, we will make money long term. We took a look at Boeing last week too. This is another one that I've got a lot of students looking at. This one also had a full winner here on the upside. This was after earnings came out, so really nice move higher. I mean, you basically pull up the symbol, and you're looking at very similar charts market wide. We saw a lot of strength here over the past week or so. Really, even back farther than that. The last couple weeks just have been a straight shot to the upside. So a couple things to keep in mind. I don't want to go too long here on this video. Some of the things that I'm looking for next week. I want to get some more short premium trades on the table. And in fact, let's take a look. Let's just get a quick update on our trade of the week for those of you that have been able to track the trade of the week. What we did there on that trade was on OIH. And one of the areas that there is still volatility in this market is in some of the energy products. Some of the energy products and some of the global ETFs still actually have some volatility to work with. So what we did with our trade of the week last week, we took a look at the OIH November 32.33 call spread. We sold that call spread. And we turned it into an iron condor because we also sold the 29.28 put spread. So let's get this whole thing in here. 29.28 on the put side and 32.33 on the call side. So when we put on this iron condor, it was designed to be more of a neutral trade. We want OIH to close right inside of our short strikes, so we want it to close between 32 and 29. We're right there. We sold this trade for 54 cents to open the position. It's now trading for 52 cents. So we've got a tiny little profit on it. We're in good position here. We just have to let this trade work. The iron condors, when you sell premium, you just have to be more patient because we're looking to benefit from time decay and volatility decreasing. It takes time for that to happen. So we're sitting pretty here. If you still don't have this trade on, you still have the ability to put it on. Okay, we have 27 days left. We're still right around that entry point. I still like this trade here for the next coming weeks. If we take a look at the Market Watch tab, you'll notice that we've got a number of names with earnings out over the next couple weeks. Those actually have decent levels of volatility. But other than that, once you start to back out some of those earnings, you've basically got EWZ, which is the Brazil ETF. You've got IBB, which is the biotech ETF. We've got OIH here. There's very few areas that have decent volatility. So if we can get a day or two of selling next week, if we can get some of these volatilities to pop back up, I will try to sell more premium. I'm a little light on my short premium trades out in November. It's difficult to find trades that I really like for selling premium. So I'll look to some of those areas next week. And then I also want to take a look at some of these names that have come out with earnings, names like Amazon and Google. I want to start to look for pullbacks. They're extended. They're at all-time highs. Let's see if they want to pull back a little bit, and we could potentially be looking at some short trades come next week. Nothing's setting up yet because the market closed right at the highs here this past week on Friday. So, we'll see. We'll revisit things during the midweek recap on Wednesday of next week to see if there's anything new that we can take a look at. But closed out of a lot of trades last week, a lot of profitable trades, a few losers along the way. And now heading into next week, I think we're in a good position because we're flat a lot of names, which I definitely do not mind. So I'm going to go ahead and wrap this video up here. I'll be back on Wednesday of next week, and we'll see what the market throws our way. So enjoy the weekend, everybody, and we'll talk again next week.